Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, guys. Good morning. Can you see me? Can you hear me? Just confirm, please. Something went off. Just making sure that you can hear me and see me. All good? All right. So, good morning, everyone, and welcome to a new episode of Chat and Chart. Today we're a little bit late because last night the timing changed again. So we are 1 hour late next week, but we had to tell you first. Next week we're going to move it back so that the London session starts 1 hour earlier. So this week we're 1 hour late. London is already open, but we had to tell you we didn't want to change the usual timing for you guys, especially from people watching from around the world. So, all right, so let's get to it. Welcome to London Session Open, although it's not really a London Session Open. We're inside the London session now. So let's start with the weekly high impact news calendar and then move to the charts and discuss what's going on in the world. Okay. All right, so we start with Tuesday. Monday, we have nothing of high impact. So on Tuesday, we have the GDP coming from Japan. The previous was 0.1. The forecast is an increase or an improvement in growth, or in Japanese growth, to 0.3%. So if the actual comes in higher or as expected, that's positive for the JPY. If not, that would be negative. But given that the JPY is considered to be one of the traditional safe havens, I'm expecting to see some more demand on JPY, but of course not against the USD. When we move to the charts, I'll show you what I mean. But in terms of the GDP, if it comes in higher, then that's more attractive for the JPY. Then we have the existing home sales coming from the US. No major change is expected between the previous reading and the forecast, which is like 0.02 difference. So it's stable somehow. If it comes in as expected or much lower, that would be negative. Excuse me. If it comes in higher, that's positive for the US dollar. All right, so that's for Tuesday. We're done for Tuesday. Let's now move to Wednesday. Wednesday is quite a big day. So the day starts with the German CPI. The previous is 0.2%. The forecast is 0.2% as well. So inflation is starting to pick up in Germany, which shows some signs of potential growth. So if this comes in higher than expected, then it's positive for the euro. If it comes in lower, then it's negative for the euro. Then we have the CPI numbers coming from the US. We have the monthly numbers and the yearly numbers, CPI numbers. Now, the monthly is expected to tick higher a little bit, and the CPI, after reaching 2.4, which is like 0.4% away from the Fed's target, it is now expected to reach 2.5%. So it's expected to start ticking up again. And now, what's tricky about the inflation situation now in the world and in the US specifically is that the US is in war with Iran. And as you know, Iran is an oil producing country. So since they control much of or a lot of this world reserve of oil, plus they control the Strait of Hormuz, um, the supply chain or the energy supply chain is disrupted now. So as we saw last night, we saw the WTI, which is crude oil, the West Texas oil, reaching 107 per barrel. So $107 per barrel. This same thing was like um, 66, 67 less than a week ago. So the increasing or the jump in energy prices would eventually mean a jump in producing or manufacturing prices or whatever prices. So it will cause everything to surge. It will cause everything or all prices to jump, which will cause inflation. And we will go back into the loop of fighting inflation with higher rates and so on. So that's a problem with, or that's a situation currently in the world. So although like we were very close to reaching the 2% target of the Fed, but after this war, I doubt they will reach the 2% anytime soon. So that's for the CPI number. Now let's move to the core CPI. It is like the previous is 0.3. The core is expected to go down, but that's the reading for February. Uh, all of this can change. Like I guarantee you, by next reading, which is March reading, you will see it go up. It will not be going down because um, energy prices are pressuring everything. Okay. Oh no, sorry, that's the core CPI. This excludes the energy prices, but however, energy prices affect everything else, so this will eventually also go up. But yeah, the course it makes sense that the core CPI is going to be lower since it excludes the energy prices. Now we move to the crude oil inventories. The previous was 3.475. No forecast number yet, but if it comes in like zero or less than zero, like a shortage, this would be even more positive and more bullish on oil prices. The 10-year note auction, the previous is 4.177%. I'm expecting to see something anywhere above 4.2% this time. So let's wait and see. Okay, that's it for Wednesday. Thursday, we only have two readings. The usual initial jobless claims. The previous is 213,000. Forecast is a slight change to 216,000. So it's still within the acceptable range. No problem with that at all. If it comes in lower, that's positive. If it comes in higher, then that's negative. Um, Let me check if you guys have any questions. All good. All right. So then we have the 30-year bond auction. The previous is 4.75%. We're going to see this go higher, I think, slightly higher, like maybe 4.78, 4.77, based on the market's expectations of future uh, interest rates. All right, so then we go to Friday. Friday is quite a big day. We have the GDP coming from UK. So the previous is 0.1%. The forecast is 0.2%. So there is expected to be a growth in the UK economy on a monthly basis for the month of January. If it comes in higher, that's positive for the GBP. If it comes in lower, then it's negative for the GBP. But really, guys, now we are in times of war, and currently the USD is, or the XY is the main um, safe haven, and the demand is like fire on the XY. So everything else, regardless of the fundamental readings, anything else could be or should be negative or bearish for the next period, regardless of economic readings. Because even if like the GDP in UK is up 0.1%, or 0.2%, this will not compensate for all the bearishness we're going to see because of the strength of the USD, as we mentioned in previous live streams, especially Monday live streams, where we analyze more than we trade. Okay, Mesa has a question. I heard in live streams that gold performed best in first and fourth quarter of the year. Yes, that is my observation. It is because of the major data release numbers like DP and others. No, it does not have anything to do with economic numbers, because GDP numbers are always like they get released on a regular basis. Same for CPI, same for PCE, same for the whole thing. But that's just an observation. So maybe it could be because of something we call portfolio rebalancing. So portfolio rebalancing is when, for example, I decide I'm a portfolio manager and I decide I want to have 60% in stocks, 30% in bonds, and 10% in gold. So if, for example, my gold now is worth more than 10% of the whole portfolio. So it was worth, for example, like 10%. Now it's worth 15%. So what do investors do? What they do is they rebalance, and it shouldn't like always be from gold to somewhere else. It could be that at the end or the last quarter of the year, the stock portfolio is doing very well. So it was supposed to be 60% of the total. Now it's maybe 80% of the total. So what they do is they reallocate those extra 20% to gold, or to silver, or to anywhere that hasn't performed well during the year. So because of that, we will see the last quarter of the year, which is the start of the rebalancing, with the first quarter of the year after, um, very active and very liquid on gold and silver. Unlike the middle half, 2 quarters, which are like usually more lucky for stocks than gold and silver. Make sense? Hello, Shishi. Thank you for joining. No problem. You can rewatch it after we finish. Okay, so then we have the GDP for the US for Q3. Wow, that's a big drop. So 4.3% is the previous reading. The forecast is 1.4%. So that's a huge, huge drop. This could be because of the government shutdown. Because, excuse me one second. This could be because of the government shutdown, because, of course, you know that the government shutdown means no salaries. Those salaries did not get spent in the economy, and they did not move the economy. So it was expected back then that each week of shutdown might cost the economy, or might cost the GDP specifically, 1 or 2 basis points per week, for example, per month. Like if it was expected to be 2.5%, for example, each week of close down shaves off 0.1%. Imagine, like that's huge. So that's how big the US government is, and that's how much the spending on the government is big. Okay. So that's the core PCE. Core PCE is 0.4%, no change. The core PCE is a slight increase from the previous, which is 3.1 in comparison with 3%. So if these numbers come in high, all of these will be positive for the USD, and we will see more bullishness on the DXY. Okay. Then we have the durable goods orders. It was minus 1.4%. The forecast is 0.5%. So that's an improvement. If this comes in like this or more, if it comes in at 0.5% or more, that would be positive, and we might be looking at a more positive or a more bullish USD. Then finally, on Friday, we have the job openings. So the previous was 6.542. The forecast is quite a jump to 6.84 million new jobs. So this is actually good for the jobs market and shows strength and resilience in the jobs market. So yeah, overall, like all of this is important and everything, but because we're in times of war and times of uncertainty, times of crisis, if you like all of these lose their true value or true impact on markets because there is something more interesting to markets to watch for, such as the war. Your question is incomplete due to YouTube limit forwards. Okay, you know where to find me, Mesa, no problem. Relate to Christmas. Okay, Mesa, you can rephrase this question and send it to me on Instagram, for example. Because correct, I couldn't understand. All right. So, do you guys have any more questions before we move to the charts? You are welcome. You are welcome. Okay, okay. Guys, do you have any questions before we move to the charts? Seems like no one. Okay, let's go. All right. And then we go here, and here, and then do this. All right. As always, we start with the DXY. One second, please. Okay, we start with the DXY, which is like showing serious bullishness. So this week I'm expecting to see another jump, maybe toward this area, which is 100.4, 100.5. That's a very important area that I wanted to break. If it does break this level, um, I'd be confident that the DXY has finally reversed to the upside, and we will be looking at something that looks like this 120. Okay, imagine where gold would go if the DXY goes all the way to 120. Okay, so there it is. Yeah, I think the floor now is 97.5. It shouldn't be breaking 97.5 if it's going to continue its path to breaking the 100.4, 100.5 um, points. So okay, so yeah, nothing to watch here. It's very bearish, very bullish. Sorry, we might be getting like small corrections, like to around this area, which is um, 98.7, 98.5. But as I told you, I think the floor is 97.3. Um, and we're going to keep going up and to keep breaking those structure points so that it reverses the upside. Okay, so that's for the XY. Now I think it's time to move to the exact opposite, which is Euro. Now, since Euro broke this, yeah, I think we're now starting a new move to the downside. One second. Let's see. One second. Let me fix it. Yeah, there it is. I've been waiting for this for a while now. So I'll be waiting for a, what's it called? Now, yeah, this is a very important. This is the pivot point, I think, in this movement, which is 1.1390, 1.1380. If this one gets broken, then the drop is confirmed, and we're going to see lower prices on euro. So let me check here. Yeah, so that's the last safety net for euro. I think if it breaks it, like you can consider it broken, to be honest, like because like this gave us a reaction. Yeah, this it could be it. Yeah, this is the last confirmation. Like it's very likely to drop now. The last confirmation is the break of 1.1380. All right, guys. What is the fundamental reason the XY is pumping? Is it cause of safe haven for future oil purchases? Exactly. Exactly, Mr. Abby. Hello, Mr. Professor. Hello, Suham. Hello. Good morning. Okay. Suham is in with two accounts. You're watching me twice? Okay. Okay. Yeah. So for the euro, I think, yeah, it's happening now. I think 1.1660 would be a good place to sell from, which is 100 pips from here. Yeah, that's nice. Okay. Hours. Yeah, we might be looking at a correction in both the euro and the USD. Like not even 1660. I would be like interested in selling around 1.1750 with my stops maybe above here or above here, depending on the situation and depending on the price action. But so far, um, it's pretty much bearish and it is expected to keep dropping. Now, you know what's more interesting than like the normal like currency pairs. The crosses are doing crazy now. Let me show you. Like for example, in times of war and in times of crisis, what happens? The dollar goes up. But since okay, what are you guys talking about? Okay, again, what was I saying? So in times of war, the dollar is obviously a safe haven, but and it goes up. But also the Canadian dollar, since this war is like with a country that is heavily involved in the oil scene and is an oil producing country like Iran. So there's a positive relationship between the Canadian dollar and the oil because Canada is also an oil producing country. So the Canadian dollar as a currency is positively correlated with oil. So oil is going up, so Canadian dollar is going up as well, but it's not going up as strong as the USD. So what do we do in this case? What we do is we find something that is going to drop against USD, and we're going to buy Canadian against that currency. So, for example, if we're expecting to see the New Zealand dollar, or not New Zealand dollar, no, for example, the Japanese yen. If we're expecting to see the Japanese yen drop further, so what do? We go to Canadian or CAD JPY pair, which is Canadian dollar against JPY, and we buy this pair. So what we do here is we amplify the move instead of like getting lost between the USD and the Canadian dollar. No, you just like amplify the move both ways. So you get more pips, you get more or wider swings, which would be very profitable on the long term. Okay. Okay, so let's take an example. Let's take a look at the USD CAD just to show you what I mean. Now, it's dropping hard. Uh, let's take a look at this. So yeah, we had this trend line here. It broke below and it retested, and then now it's correcting to the downward. We can go all the way to this area, which is 1.23. That's on the weekly. Yeah, look how beautiful this is. It broke below the trend line, retested, and now it's moving downwards again. No, I don't want to copy. What's happening here? Okay, that's the daily. So yeah, the daily is dropping, meaning that USD is losing strength against CAD. It's showing that CAD is gaining strength. But imagine you go and see it against something else. Like, let's see what, yeah, this is CAD JPY. Look how strong the Canadian dollar is against the JPY. Did you get my point? Look at the weekly. Like after this very big drop, look, in a matter of 4 weeks, we went up from uh, 112 to 116, which is like quite a climb for currencies like the Canadian and the JPY. So let's take a look at this. I think we're still in upward movement. Let's see where it might correct. So this area, which is 109, might be interesting for me to enter. Maybe it will never reach there and keep going up. We'll have to wait and see. Yeah, I think it had a plan to reverse downwards. Then this happened and it reversed. So I don't know if you understood, guys, but or if I made it clear enough. But that's an example of a strengthening currency, which is the Canadian dollar, okay, against a weakening currency, which is the JPY. The uh, the climb is much stronger than the climb against the USD. Why? Because the USD is gaining strength as well. Okay. So here it went up 5%. Let me just check here. Here it went down 1.5%. So against the USD, the Canadian just gained 1.5%, while against the JPY, it gained 5%. So, did you get my point? We can make profit anyway. All right, great. So now, where do we move, or or what do we discuss? And we are done with this. So, guys, my advice would be pay attention to crosses next period. It's going to provide you with great opportunities. So let's take a look here. Gap down on Dow Jones. Same for S&P 500. And same for NASDAQ. All breaking or all opening gap down. So let's wait and see. But I think this is the beginning of the uh, big correction. Let's call it, not a crash. So on the Nasdaq, we're like the 23,500 is an important level, and then we look at 20,000 or 21,000, and then finally we look at 18. But this is very, very like extreme. If this actually happens, it means that it would have dropped 30% from the highs. That would be like a very big deal. So, but if you see Nasdaq around 18,000, definitely go for it and buy. Okay, let's take a look at Dow Jones. Dow Jones is a little bit different. It would be like the drop from 50 to 40 would be 20%, a little bit less. Yeah, so here's 40. Yeah, so that's almost 20%, maybe 22%, which makes sense that it doesn't drop. Remember, guys, when I drew this arch with you? No, now, like, do you see how it started losing momentum and then, like, it started rounding down? And voila, this is what happened. It stopped like trending properly. It started rounding up or rounding down. It's creating somehow a dome. So this makes it unsustainable and very easy to break. So that's what happened. Last week we had the war. We were very close to the highs. Then we closed very bearish last week. And then we opened with a gap down and we're continuing to go down. I think if we go all the way to 5,500, that would be a great place to buy S&P 500. This is under the theory that everything will drop and the US stock market will crash because of this war, which, in my opinion, might happen. That's a possibility because the US is not, or Trump specifically, does not have a plan. He discovered that Iran is pretty strong and they have like they have smart people. So I think he didn't plan on making it this long or making it this big, but he has no exit, he has no plan, and this war might extend. So if that happens, we're going to see like sooner or later we're going to see crashes in the stock market. And in crashes, you can make money, you can make wealth trading crises, but some people say that it's not very ethical, but you're not hurting anyone anyway. That's your job. Uh, it is what it is. Okay. So now I think it's time to move to gold. Gold is expected to, what's that? Gold is expected to continue dropping at least for like another $200, $300 from here. Yeah, $300 to 4,800. The daily. So we opened slightly bullish, and then we broke Friday's low, which was 5,060. Now it reached 5,020 to like during the Asia session. Now I'm expecting to see 5,000, and then after it we're going toward the 4,800 or late 800s. Okay, if that breaks, we're going to see lower. But where am I? Where's this? Yeah, let me go to 4 hours. Yeah, so far my theory is working. Um, my theory, which says that 1 second, please. Yeah, so my theory, which says that we might be dropping all the way towards this area because this drop was very sharp, and this was just a correction, and now we're starting to move lower, or we might be moving lower very soon once we break this level, which is 5,000. So after 5,000, we have the 4,800. If we break 4,800, we're moving to this low, which is 4,400. If this breaks, we're moving to 3,800, and this would be my perfect place to buy from. And I hope we reach there because, like, I think this will be my trade of the year if it drops to this. Okay. Uh, yes, like not 150, 180. To remind you, 180. And I'm going to close at around 5,000. I had two trades. One of them got stopped out at break even, and the 180 is still running, and I'm going to keep holding it to 5,000. After 5,000, I'll decide what I want to do. But so far, let me see. Do I have it here? Yeah. So what happened here? Yeah. So I might be selling again around this area because that's an Elliott triangle. That's A, that's B, that's C. No, but no, it's not anymore. It broke it. No, forget about it. It broke this, so it got invalidated. But anyway, it's dropping. So regardless of what it is, it's going to drop. Okay, that's what technicals are showing us: a drop in the gold. So where are we heading? According to Mr. Fibonacci, we're heading towards 4,900. So let's wait and see. Um, all right, guys. Do you have any more questions? I'm going to just take a look at the DXY, sorry, the WTI, which is the crude oil. I'm gonna take a look real quick. Oh wow! Remember when, guys, when we drew this line together? That's crazy. So last month, which is like last week, um, it closed around 67. Last night, or like this morning, very early morning, during the Asia session, it reached 107. So that's $40. Imagine. So that's a 70% jump in a single night. Imagine, or like a single week. Yeah. Unfortunately, it never reached here. I wanted to see 65, never did. It went to 69, and then, yeah, continued going up. So, guys, now we have a reversal to the upside. We're almost near the Ukraine Russia high, which is around 128. Where's the daily? Yeah, still very, very bullish. Like, this is not tradable at the moment. The oil is not tradable. It's either you predicted the war and you predicted, or like you did your homework, your technical homework, and you saw that this was like January's candle was an engulfing candle, and then you bought at around 61 with stops at 54, and like held the whole thing. That's the only case that you would have made money out of um, crude oil, because it is not tradable at the moment. It's very volatile, and like even the trading conditions with brokers are a bit hard on oil. The margins are up, and like slippages are crazy. So stay away from oil, especially if you are trading. There was a news a few hours ago, EU releasing the reserve of oil. Will that affect something directly apart from oil? No, I think they're using it to like just to get by, because like they don't have oil. Imagine like when we started talking about oil, it was 100. Now it's 102. So that's how crazy this is. So stay away from oil. We'd love to see the trades live executed. All right. So then stay tuned for is it Thursday? Yeah. Stay tuned for Thursday's live stream. You will see them live. Okay, okay. Yeah, so guys, do you have any more questions before we call it a session? I think this will drop. Silver is going to drop further, I believe. It's doing exactly as I drew. So yeah, I'm going to trust this arrow. So we have this, and then yeah, we might be moving toward this area. which is 54. 54 is a great buy. I would be more than happy to buy around 54, which is equivalent to 3,800 on gold. All right. Nothing from your end. All right. Thank you, Mesa. Thank you for joining. Thank you, everyone, for watching and for tuning in. And if you have any questions, you know where to find me. And take care of yourselves, trade responsibly, and like good luck trading this week. Take care. Bye bye.